Good evening, everyone, and thank you for joining us. My name is Gerald Jones, Executive Manager, Member Engagement at Credit Union SA, and I'm pleased to be your host this evening. Before we begin, I'd like to acknowledge the traditional custodians of the land on which we meet today, the Kaurna people of the Adelaide Plains. I pay my respect to their elders, past and present, and I extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. On behalf of Credit Union SA, welcome and thank you for joining us for tonight's webinar on budgets and the SA economy and what it means to you. Sessions like this are one of the ways we support our members beyond banking by sharing practical information, insights and guidance to help you make more informed decisions with confidence. In terms of tonight's format, please use the Q&A icon at the top of your screen to lodge questions as we go through. If they aren't covered during the presentation, I'll raise them during the Q&A session. It's now my pleasure to introduce Dr. Susan Stone, Credit Union SA Chair of Economics and an economist at the University of Adelaide. Susan brings deep expertise in economic policy and a practical perspective on what current trends mean for households, communities, and a broader South Australian economy. We're delighted to have her with us this evening to help unpack these insights in a clear and meaningful way. Susan, thank you for being with us. I'll now hand over to you for tonight's presentation, and I'll return afterwards to facilitate the Q&A.
Thanks, Gerald, and thanks everyone for taking the time out of your evening to join us here today. Hopefully we'll be able to unpack some of the questions you had, and thank you once again for submitting questions, and I'll hopefully address those as I go through, and as Gerald said, there'll be time at the end for Q&A. I would just like to give my own personal disclaimer that these are my opinions and conclusions that I am drawing, and they don't necessarily represent the Credit Union, South Australia, or Adelaide University. So let's see. I'm going to talk about some broad economic trends in the beginning, what's going on right now in the broader economy, how it affects both Australia and South Australia. Talk a bit at the end about bringing it together with the state and federal budget items, and then talk about what that may mean for future performance. But I'll probably talk about future performance throughout the talk. So first of all, the biggest news of the day, we have a memorandum of understanding that will begin the beginning of the end of the war in the Middle East. Some things to keep in mind going forward, that the oil price, it immediately dropped, and that's great. It's now, I have 84 on my slide. I think it's around $82 right now. And that's going to be a big relief, but it's still a far cry from the $60 a barrel that we were seeing back in January, so before the hostilities began. So we will have a period of adjustment, and we're going to see that the initial oil flowing through the strait will most likely go to refill countries' reserves, because countries have been using up their reserves during this time to keep oil going to their economies, which has been very important to keep us all going. So that'll be the first port of call. And for example, in the US alone, they're at a 43-year low in terms of oil reserves. In Australia, we're at a low, not quite 43 years, but this is what's going to happen first. So we're looking at, it's going to take some time to replenish that before we start to get into regular or prior to the war oil flows and energy markets returning to something akin to normal, even though we have to think that energy markets were pretty shaken up and we may see some longer term changes coming from that. So we don't know the extent of facilities damages in the region. There's been this big disruption of shipping routes that have come about because of the war. All these things really need time to sort themselves back out. And as I said up there, it's estimated 6 to 9 months just to kind of get things back. But to get things back to normal, that is a more open question. Actually, what I just said, who knows what normal is going forward? So we'll have to wait and see. But one of the things that's been particularly disruptive to Australia, including South Australia, to our farmers, has been the disruption in fertilizer. So that has had a big impact on planting decisions by farmers, both what they've planted, how much they've planted, how much fertilizer they can use, which will affect yields. So we're looking at probably having some impact on prices on food toward the end of the year. And I guess what I really kind of want to say from this slide is that we're not out of the woods yet. It's not like everything's going to go back to normal. There's going to be a big transition period where we may see continued high prices for a while, which I'll get into a bit later when we talk about inflation. So what this has done and what's happened, the OECD is the Organization of Economic Cooperation and Development. It's an international organization that does a lot of projections for different countries. And you can see there Australia listed. And really, don't worry about the rest of it. I just want you to kind of show the two red dots, which means that Australia's growth has been revised downward by the OECD for, now this is for the calendar year, so we're looking at for the next 6 months for Australia, and then for 2027, they were at 2% and 1.9% before, so they've been revised down slightly. The only other country that has both years revised downward has been Germany, whose manufacturing sector has been very much affected by the war. So Australia, a lot of our exports, and one of the big things is that our export markets in Asia were heavily impacted. So a lot of people that buy our goods we're having serious impacts on their economy, their growth, which will mean we may not be able to ship as much goods and services overseas as we have in the past. So that's why they were revised downward. If we then look at what the fertilizer was doing, as I alluded to earlier, this has been a major impact on Australian farmers, South Australian farmers as well. And you can see that I have a little triangle dot up at the top for the right, Australia. That's the amount of fertilizer that Australia imports. Okay, and even though you see a bunch of lines across 100%, because many of the countries listed actually import all of their fertilizer, Australia's almost all, it's 92% of our fertilizer comes from imported. And the little Australia blue box off to the right is how much actually comes from the Middle East, and that's about 64%. So we're not as exposed to some countries like South Africa and other big agricultural exporters, but we were fairly exposed, which means our farmers have had a difficult time getting the amount of fertilizer that they've needed to plant. Let's talk about prices. As I said, what's going on? We don't expect there to be a huge decline in prices. There will be this immediate relief in energy prices, not a huge reduction, but the relief will be there. And what I have here is the CPI, which is the Consumer Price Index. That's what they call the headline rate. That includes everything, including energy and food. And that was last month, that was at 4.6%. This month, it's at 4.2%. The RBA, the last column there with the two graphs, that's what the RBA expects inflation to be in June of this year. This is what they're expecting. So we're doing well, as you can see by that measure. The current rate has gone down and it's below what the RBA thought we were going to be. So that's good news. And even with the trim rate, now the trim rate excludes really highly volatile items like things that prices change constantly, like food and energy. That's the rate that the RBA likes to look at because that really is a much better measure of underlying or how strong inflation is in everyday goods that you buy. That went up a bit this month, but it's still below what the RBA expects. So if anybody likes to watch these numbers, you can see when the numbers come out next month for June, which will come out in July. You can see if it's at how close it is to the RBA's expectations, because that will be a big point in the decision-making process. If we're doing a little bit better, the RBA tends to relax. If we're doing a bit worse, the RBA tends to worry. And that's why we saw those 3 rate hikes previously, is because we started to do worse than the RBA had expected. So we can keep our fingers crossed that these numbers will go down. As I said, because the war in the Middle East is beginning to end, we can expect to see a bit of a cut in lower energy prices. If the excise tax relief goes away, then that'll probably be a bit of a wash. But hopefully other goods, we may see a continued pressure on prices for the short term, but hopefully over the long term, we'll see that start to come down, or even the medium term. And this gives you a little idea. Sorry about all the lines there. It's quite condensed, but this gives you an idea of where we are in South Australia in terms of growth. The top graph is the total growth for the state. And as you can see, back last year in March, April, May, we were actually growing much quicker. And the bottom graph is really, it's called, I have private capital. It's business investment spending is basically what that is. And that was really driving South Australia's better than everyone else's growth in output, including consumer spending household spending was pretty strong at that time as well. But as we've kind of come down, we had a bit of a blip earlier in the year. That was again driven by stronger business spending, but it's tended to trend down as business spending has trended down. So while household spending has been fairly consistent, government spending is not is in these numbers, but not like the big infrastructure spending that you think about. It's the everyday spending on especially frontline services. That's been continuing to go along, but a lot of the volatility or the changes is really being driven by business spending. And if we look at what we think is going to happen with business spending into the future, you can see the confidence under the confidence. That's the NAB survey of businesses, and it's got has two lines there. The red one is business confidence, and the black one is business conditions. And I find it interesting. The thing that's I find interesting coming out of COVID is that business confidence has been consistently below business conditions. Now, business conditions means what are interest rates like? What's demand like? How is the economy fairly good for business? But businesses have consistently viewed that more negatively and have been very conservative coming out of COVID in terms of their outlooks. So that's why we saw a bit of that business investment spending going up and down, because they're really not quite sure. And then, of course, since the war in the Middle East, we've seen a huge drop in that. And that I expect next month that'll to go up a bit. You see the same kind of idea in Consumer Sentiment Index. That's from Melbourne University and Westpac. They do a survey of consumers, ask them how they're feeling, how confident they are. And you can see that in June, the most recent one, consumer confidence is also heading way down. We saw it going up a bit. The last couple of interest rate hikes really took the wind out of the sails of many consumers, and therefore they're not as optimistic as they had been in the past. And the bottom graph is really just for South. It's the SA Business Chambers survey of business confidence for businesses here in South Australia. And you can see that that's also that kind of has a bit, it hasn't gone down quite as much as the Australia overall confidence level, but it has been going down. So what this shows is that business conditions and consumer conditions are generally a bit better than people are perceiving them to be. People are a little bit pessimistic. They're a little bit worried. and they're a little bit concerned, and therefore they're holding back in terms of businesses holding back as well. So we'll have to see how that comes out going forward. And we're looking about one of the other things the RBA considers in a big economic factor is unemployment. But everybody, well, maybe not everybody, but there's a lot of information on unemployment. We know that the last quarter unemployment was slightly higher than expected. The RBA was thinking it was going to be about 4.2%. It was around 4.5%. South Australia, it was 4.2%. So in South Australia, it's about where the RBA expected it to be, but overall, it's a little bit higher. But this is the number of people that hold multiple jobs. And so this probably goes into that pessimism that I just showed you on the last slide for consumers, in that the number of people that are holding more than one job has been increasing. And you'll see that the line is the trend, is the rate at which, and the bars are the numbers of people. But the rate is a bit interesting because you can see that prior to COVID, up until 2022, that rate had fairly consistently been between 5 and 6%. Up until about 2015, it was pretty much close to 5%, but then it went up a bit to 6%. But over the last pretty much 40 years, I can say, it's been, even going back before this, it's been around 5 or 6%. Since 2022, since COVID, we've seen it between 6 and 7%. You can see it's almost reaching 7%, and it's been staying there. So more people are feeling like they have to work more than one job. We see the rates are highest among younger people between 24 and 27. The rate of holding more than one job has increased the most for that cohort. We also see more women. Women hold two jobs at a rate of about 7%, where men hold it at about 5.5%. And we also see that the regional communities tend to have a slightly higher rate of multiple job holdings than the cities. So that is probably contributing. We know that there's, since COVID, since we've seen this increase in inflationary pressures and cost of living, that's really increased the number of people that are holding multiple jobs. And that's going to be a big indication of people's confidence going forward as well. So did I skip? Did that go twice? Yeah. So if we look at, well, actually, I'm going to go down to this one. Let's look at the changes in dwellings. Now, if we're thinking about, let's talk about the housing market for a bit, and the economy in general. So we saw that inflation is going down a bit. Inflation in South Australia is pretty much, it's a little bit higher than the national average, but not that much. We saw that unemployment's a little bit higher, multiple job holders are a bit higher, confidence is down. If we look at what's going on in the housing market, because the housing market drives a lot of these people wanting to work more than one job or feeling like they need to work more than one job, as well as the CPI, because housing has been a major component and driver of changes making that consumer price index rise. So there's two ways you can look at this. These are dwellings that have commenced, and these are dwellings that have started. So when you look at the ABS, they provide building activity. And you can see there the dashed line is South Australia. And South Australia has really been doing fairly well in terms of buildings commenced. In some years, it's been among the highest. In the states that aren't shown is because they have very small numbers. So these are the states that have relatively larger shares of building activity that have commenced. But it's really the bottom one, changes in dwellings completed, because that's important, because we've heard how the time it's taken to build and complete a house has gone from 9 months to 18 months, in some cases up to 24 months. And so this has also been pressure on the rental market, as people have to stay in rental properties for a longer period of time. So it's important to not only start housing construction, it's important that it gets completed in a fairly timely manner. And here, South Australia has done very well. And South Australia really has, in terms of the housing it has coming online, has been doing well nationally in terms of being able to complete that. And you can see that also in terms of the numbers The construction industry has been very strong, even outside of government construction. Private sector construction has been strong for that. So that's a good thing for South Australia. And about 15% of those dwellings are in social housing. There's no fixed amount that's required in terms of new of dwellings that are put in place, that are started and completed, but it generally is about 15% of new builds are going toward social housing. So the other thing now, if we go back looking at that, we're now looking at new housing finance. Okay, so this is from Westpac. Not that Credit Union SA couldn't do a better job, but we'll just take it from Westpac anyway. So this is looking at what they're projecting to happen in terms of demand for new housing finance going up to 2030. And as you can see here, they expect new housing financing to increase, total increase, owner-occupier increase, and investor to increase. Where the difference is coming in from what was happening before is the rate at which investor new housing financing that they expect that to grow a bit slower. You can see there's a dip. Everybody had a dip when we had those 3 interest rate hikes, but now going forward, they expect to see most of the new growth coming from owner occupiers and lesser from investors. But that's not to say that investors aren't expected to continue to demand financing for buying houses. And the other one is, this is also from Westpac and CoreLogic in terms of what they're expecting dwelling prices to do. So you can see that over 10 years in Adelaide, the 10-year average for price increases have been about 7.5%. 2023, lately, 2024 was a record year at almost 14% increases. 25 was 8.3. Now, everybody's seeing a slowdown in that growth. We see actual declines in Sydney and Melbourne, where that housing prices are supposed to come down a bit. But you'll see that Adelaide has a slowdown, but it has the smallest slowdown. We're only expected to go down to 7% for growth this year in terms of price increases. There's still a lot of pressure in the Adelaide market. There's still a lot of demand. There's still people who are moving here, and there's still, even for people that are already here, strong demand in this market for houses. So the prices are expected to maintain relatively strong growth, and going into 2027, the growth goes down, but again, by a smaller amount than most of the other markets, except for Sydney and Melbourne, that are supposed to go back and adjust. But we see that growth to be pretty strong and maintain that way. So let's talk about the budgets. Now, you've got that picture of what's happening and what we expect to happen. A lot of those changes in the housing market has been driven by taxes. The big changes in the federal budget, everybody knows, is the proposed changes to the capital gains tax, to negative gearing, to trusts. This has a big impact, especially the trusts in South Australia, because a very large share of South Australians get the majority of their income basically through trusts. And a lot of small businesses have used trusts to try to protect assets. So this will have a fairly large impact on those businesses and those people here in South Australia. We do expect South Australian businesses to continue and have strong growth, we hope. But that will have an impact, as well as the housing market. As I said before, we still expect that to grow. We expect housing prices to grow, even with these proposed changes. NDIS is also another thing that's going to have a potentially larger than average share here in South Australia. And that's just by numbers. It's just because as I said, 24% of NDIS recipients, the largest share, are located in New South Wales. And New South Wales has about 31% of the population for Australia. South Australia has about 7% of the population, but our NDIS participation is about 8.5%. So there are more, relatively speaking, per capita We have a few more people on the NDIS, so there may be a bigger impact there. We still have to see what the final distribution is and how much the state government is able to pick up on some of that through different programs, but that all remains to be seen. One of the things that I think is very exciting in this new budget, and this could just be me, is the R&D incentives and the incentives for innovation. Now, this is very forward-looking. One of the things with Australia, I'm sure many of you have heard, people are concerned about productivity growth. They're very concerned that we're not growing enough productivity. And productivity means that we just do things a little bit more efficient, so that if you're working 5 days a week and you produce 30 widgets, you could still work that 5 days a week, but instead you produce 60 or even 70 widgets. And that's got a lot to do with things like technology, how much you can work with the latest technology, but it also has to do with how much training you get and how much businesses are willing to invest in new and innovative ways of doing things. And this growth is critical to our standard of living. We've seen Australia have very flat growth, including South Australia, very flat growth in productivity. We really do need to do something to shake that up. And so in this, and I'll get to it as well, because the state government also is putting lots of money into this, we're trying to incentivize and make it easier for businesses to invest in research, to invest in new and innovative ways to do things. And we're hoping to be able to invest more in smaller and medium-sized, high-growth businesses, because it's these businesses that really tend to be very innovative. Really large businesses, maybe like Santos or BHP, or these businesses, or the big banks, they tend to innovate very small, only enough really to kind of keep their marketing edge and their markets that they have. It's really medium-sized businesses that really invest in innovation, where we grow. In South Australia, we really need this because we need to provide jobs going forward for people. We don't want to have people reaching a certain stage in their career and feeling like they have to move to Melbourne or Sydney to get a decent job. We want them to be able to stay here, to raise their families here, to pay taxes here. So, and these are, it's important for people in their 40s and 50s to have those opportunities here in South Australia, and that's important that the business community can provide that. So these R&D incentives and the possibility for changes in the super performance test, which I won't get into, I think are good opportunities for that kind of investment. Skills and migration, we've heard that at the federal budget, they are trying to maintain the same levels of migration, but they're going to just increase the skills criteria to access migration. In South Australia, we've always done fairly well with migration. A lot of that has to do with the fact that we're considered a regional center, so it's easier for people with skilled visas to get visas to come to South Australia. Many skilled migrants, they'll initially put down Melbourne or Sydney for some of the reasons I just said is why we need more R&D and innovation spending. But we need them to come here. We need skilled workers to come here. And so we've always had a bit of an outsized share, given our population, of skilled visas for migrants. And we want to continue that. So hopefully going forward, now that they've put this cap on, South Australia will be in a better position to get a larger share of those skilled workers, because we really do need skilled workers coming into the state. And health and aged care funding, we saw that there's been improved access to home care supports. The federal government has put back on a lot of the personal services that they had proposed or had cut from aged care funding. They've also included another $25 billion for public hospitals. It's not completely clear at this stage how much of that South Australia is going to get, but it'll probably be in the area of about $2 billion, which will help fund some of the public hospitals here. And there's been an increase in the number of aged care beds. And so hopefully that will help also with health health system to be able to move people through and have people treated where they're best treated. So the key provisions for the state budget is, as the Premier and the Treasurer like to say, it's a pretty vanilla budget. There weren't any surprises. I think they felt like everybody was dealing way too much with the changes in the federal to drop any big changes in the state. So these are all basically things that they talked about during the election: more rent to home, more properties that are going to be dedicated to, they have a dedicated development for first-time buyers. There's more, now they have this pre-sale guarantee that they're helping for CBD apartment developments. They're expanding Home Start. These were all things they talked about during the election. Concerns, we've heard a lot of concerns from the public about the level of debt. That's been a big question from many South Australians. They're very concerned about that. Personally, I think that it's not an area to be overly concerned with yet. The things you need to worry about with the public debt is the ability to service that debt. The share of interest expense in the government budget is expected to increase. And therefore, we really do need to rely on economic growth to ensure that that's a manageable increase. The projections in the budget are fairly, they're not super optimistic, they're not pessimistic, they're fairly middle of the road. So there really isn't any reason. But governments do need to take on debt. It's part of their reason for existing, is because they do these huge projects that the private sector couldn't or wouldn't be able to do. And so they do need them. They tend to be lumpy. They do tend to come in at periods of time, and then hopefully we can pay it down, and then we'll be in a position. The only question would be is to the extent that if we had a series of really bad disasters, what would happen? But there is some level, because the budget is predicting levels of debt than they had in the past. What would end up happening is they would probably just go to those higher levels of debt that have been projected before. So right now, I think the debt levels are manageable, but it is something that we should definitely keep an eye on. Continued public support for Port Pirie and Whyalla. Those are, big dollar numbers for the state government. They see those as being an investment in our ability to produce certain types of products that we need. And therefore, we don't want to be too exposed internationally. It makes sense. It's cheaper in many cases to buy these goods from overseas and then to produce them here. What the purpose of this public support for these two facilities is that they're like a backup. I don't think that they're not going to be able to meet the entire demand for these products that Australia has. But if something were to happen, if we were to get into another situation where we were cut off from these goods, we would still have to be the ability to produce them. So that's why there's some public support, but they are looking for having some private sector, or really for Whyalla, complete private sector investment in there. And one of the things that was concerning about the budget is that they have not adjusted the cost estimates for some of the bigger infrastructure projects. So we can probably expect those numbers to change. But as I said, we'll have to see how that comes in. Those cost increases are matched against any improving outlook for growth in the state that might be able to offset those. And there's really not much specific to business support, except as I alluded to earlier, there have been proposals for more spending on innovation to kind of really take what's going on at places like Tonsley or Lot 14 and really develop those into the big companies of the future that can provide jobs and growth for South Australia. So that's my take on things as they stand. And I'm going to turn it back over to Gerald for the Q&A.
Thank you. Thank you, Susan. Yeah, very, very insightful. And, especially when we look at what's happening here in South Australia, there's visibly there's a lot happening.
Yes.
And our Premier is making sure that that's visible to all its constituents. There are a couple of questions which I'll turn to now. These questions were asked through the presentation. The first one refers to the state budget. Sorry, our state, in terms of regarding defence, infrastructure, and housing spending.
Yeah.
All ramping up simultaneously. Where do you see the labour market pressures emerging in SA over the next 18 months?
Yeah, that's a good question, because we're already facing labour shortages, and especially in construction. It's an interesting dilemma, because we need workers to build houses, but we need to put the workers somewhere if we bring them in. So there is this issue with trying to get that balance, but also there's an issue with competing. We heard that part of the budget was that the state government has announced that for non-frontline workers, they're only going to replace 1 out of every 2 job openings. So they're planning to cut down the size of the government, because they explicitly stated that they don't want to be competing for workers. But a lot of these big infrastructure projects require like similar workers that you need to build houses. And so there is an inherent competition there. Now, over the next 18 months, we're hoping to come to fruition some of the people that are going through the TAFE system that are being trained right now. There's been some smoothing or efficiency gains in trying to get people from being a student to being an actual apprentice to being an actual worker. And they're trying to make that system more efficient so that that process can happen more quickly. We know one of the big bottlenecks there is having enough mentors or having enough people to help the apprentice along. And so we just need to make sure that we can keep this system going. And I think for the next year, we'll probably still be seeing these kind of bottlenecks. But hopefully, as these cohorts come out of TAFE and become online and can move up, we'll see that lessening over time.
Do you see in some sectors we see people coming out of retirement?
Yes,
to support the economy and to support business. Do you see that trend increasing?
I know that there's a desire for the trend to increase. But that's a personal decision that people have. The good news is that they don't have to lose their senior card now if they want to go back to work more. You know, you still get your senior card. That was one of the things in the budget. So if that's an incentive.
Yeah, excellent. Another member question we have here is regarding Adelaide households. So households with property exposure, what 3 economic indicators would you watch most closely over the next 12 months?
Yeah, that is because there are, right, in South Australia, many households have property investments. And what's going to influence them, I'm going to aside, like from basic economics, besides from the tax, are things like how many of these workers, construction workers, we can either bring in or graduate and get online. And as I showed before, the building, the household, not just commencements. So we want to watch out for how many building approvals we have in the state, and how many of those approvals are actually started, and then how many of those started are completed. And that line has to be, we've been doing well so far, but we really do need to maintain that. And we do need to ensure that there's plenty of infrastructure spending, because that's been a downfall in the past for some different areas where the household building kind of got a bit ahead of the infrastructure. So we need to make sure that the necessary infrastructure is in place so these houses can come online straight away.
Yeah. Very good. And another question we have here is hot off the press from yesterday about the RBA update, putting rates on hold. I guess it's probably a question you get a lot regarding the outlook for the remainder of the year.
Yeah, it is uncertain, but I feel like we've been saying that for about several years now. But the issue is that the RBA has a dual mandate, right? It's supposed to be in charge of ensuring price stability, but it also has to consider employment. In other words, it has to consider economic growth and the ability of the economy to keep people employed. So those two things it's been balancing. But given that inflation it really hurts everyone. It hurts every single household. It can be, and those people that are on very limited, like fixed pensions or other types of support that haven't been indexed, it hurts them even more because it means a larger share of their income has to go to just making ends meet. So the RBA needs to balance that. And I think given the uncertainty with how long it's going to take for the Middle East conundrum to unwind itself, and we have to keep in mind that the inflation was really being driven mostly by domestic pressures. I mean, even it's funny because South Australia has done a bit of its own lifting on that, because South Australia has been spending in terms of especially like recreation and hospitality and restaurants, and that's great for business owners because it means people are still out there spending. But it does mean that that is a bit of more pressure from that domestic spending, which is keeping prices high, which is keeping demand high, which makes the RBA's job a bit more difficult. So that's they have to balance that. But I think what's going to happen is they'll let these 3 rate hikes do their work through the system. That often takes time, and then they'll see how the numbers are coming. If, as I said, inflation has been going down a bit, if it continues to go down, and if the unemployment rate doesn't, that was just 1 month that we saw it jump, that we saw it increase, and if it hovers there or goes back down, if unemployment doesn't start to increase at an alarming rate, then they may just hold and let things happen, and we'll get out of this that way.
Yeah, the cost of living pressures are certainly, they're real.
Yes.
And I'm sure they're being experienced around the state. There were questions that were asked by members, but they were more of a personal nature.
Yes.
So given that we want to keep it general and it's no advice, we can't unfortunately answer them.
Yeah.
But we do appreciate the time taken for those members to inputting them through the Q&A.
There was a question about that I didn't answer specifically about the impact on renters.
Yes.
And what all of this may mean for renters. And it's going to be an interesting outcome, because there are 2 opposing pressures when it comes to renters. Like, as I said before, the blowout of the time it takes to build or renovate a home has put tremendous pressure on the rental market, because people can't move into their new home, or if they had to move out, they have to stay in the rental market longer. So that's put a lot of pressure on rentals. So as that backlog, as we saw those completed projects, really come online, that will relieve some of that pressure. But there's also the incentive, if more people, if the tax changes do allow more people to owner occupiers or first-time home buyers to buy a new home, they'll move out. Many of those are in the rental market. So they'll move out of the rental market, which should take some of the pressure off. Those 2 phenomenon should take some of the pressure off the rental prices increases.
Yeah.
If we don't see as many investors coming in, that would mean that maybe there aren't as many rental properties becoming available. And so it's really which of those dynamics really have the strongest impact in the state. So the more we saw that, as I mentioned, one part of the state budget is they have a community that's brand new build. So you get all the incentives that comes with doing a brand new build. But it's only for first. It's not available for investors yet. So it's just first-time home buyers.
Yeah. And just further to that, we had another member question: how likely are the discretionary trust and capital gains changes to be passed into law in your perspective?
in my perspective. So I think that at the end of the day, there's fairly strong support, not strong, but I think there's going to be enough to get them passed. The question to me is, are they going to be passed in the form that they were proposed in the budget? Because we saw there's a lot of discussion about differentiating assets that are held for investments, especially startups, with housing. And the issue with the startups, especially tech startups, one of the things with those is that because tech startups usually don't make money for a while, and we're all competing for skilled workers. This is a big thing. So what many tech startups will do will say, you come on board, you're great, you're really skilled, we want you. We can't pay you much. So we're going to give you stock options for when we become big and famous, and you're going to be able to sell, for $135 a share like SpaceX and become rich. Now your base is zero. So so that's a big, now these are very long-term investments. So at the end of the day, we're not sure the actual impact that will have, but certainly that's something that people are worried may affect incentives. Having said that, most people don't invest based on what they're afraid they're going to have to pay in taxes somewhere down the line. Most people are excited at the opportunity of having tax problems. That usually means you're making good money and you're doing well. So we'll have to see how that plays out.
But one of the graphs that you had up before showed the forecast for investors still going up.
Yeah, and that's housing. That's housing. Yeah. So
plays into that.
Yeah. And in terms of getting investment money here to South Australia, because as I talked about, what we really want is business growth and innovation and people to invest there. So we want to see, it would be, in my opinion, it'd be very nice if people who were going to invest in housing were to put their money into some kind of fund that the businesses could avail themselves of to help them grow. Because the more funds that are available, like anything, the more quantity, the price goes down, businesses can get access to this capital at a more reasonable rate, and it allows them to then invest in themselves and grow and things like that. And that's a much more productive use of our money as Australians than putting it in my opinion, putting it into housing, which is not, housing is great and everybody wants a house to keep their, roof over their head and all that. But having, like having a lot of investment properties doesn't really add to the ability of the state to generate jobs or generate business growth, like investing in business.
And we definitely know that the Great Australian Dream is still there for first home buyers. Into the
it's everybody's individual decision, but from a statewide perspective, it would be nice to be able to channel, because there's people have money to invest in South Australia, and it would be nice to see some of that money be channeled into where businesses might be able to avail themselves of it.
Excellent. Well, thank you, Susan, for addressing those questions. I don't think we have any more that have come through. Thank you for sharing your insights with us tonight, and with our members who are joining us at home. We appreciate your time and engagement. We hope tonight's session has provided useful and practical information to you. I'd also like to let you know about our upcoming seminar, which is both online and in face-to-face, Transition to Retirement member event on Wednesday, the 15th of July, which will be available in person and online. If you're interested in that particular event, then please head to our website to register and find out more. Please also look out for the recording of tonight's webinar that will be shared with you by the end of the week. In addition to that, we'll also be sending a short survey, and we're very grateful if you could take the time to complete it. Your feedback helps us shape and improve future events for our members, and we certainly want to engage with you more. As a little incentive, we will be providing a $50 voucher for one person who completes that survey. So thank you again for your time this evening. Thank you, Susan,
Thank you.
in joining us.
Thank you.
We look forward to continuing to support your financial wellbeing. Have a great night and stay safe.